In this video, I want to revisit the way that you can determine your directional bias, because that's important. Many retail traders struggle with identifying the direction of the market. And I have done a video in the past on this channel about how you can do that. And I just want to review and provide some more information about the process. Now we're looking at a daily chart of the euro, okay? And my typical trading is that I will want to see a reversal. I trade reversals. I don't like trading continuation. So I will kind of look at the market on a Monday, on a Tuesday, on a Wednesday, which is a midweek, and I would want to see a reversal at that point to trade the reversal from like Wednesday, Thursday, Friday upwards. Okay, that's kind of my style of trading. Now this here was last Friday, okay, and this here is Monday, right? Let me delete all my drawings because I don't need all those. So I can draw again. So we, in this current trading environment, okay, now notice that Friday is the 3rd of May. So that's basically the high of the month, okay? That's the high of the month. Let's put a line there, okay? Now, Monday starts here, and Monday trades, and then Tuesday, we go lower, okay? We go lower than Tuesday. Now, you got to think about where's the market going. The market is always moving for one of two objectives. It's either moving to rebalance something, or it's moving to take liquidity. Liquidity just means stops, right? People are long, they've got stops underneath where they went long, and so the market wants to go below the level to take out stops. That's what we call liquidity. I'll talk more about that as we discuss this chart. So this here is Thursday, 2nd of May. This is Friday, 3rd of May. This is Monday, 6th of May. Inside of those 3 trading days, there's this massive gap here, okay? It's inefficiency. Let's just call it inefficiency. Okay, so it's between, let me draw this, at that wicks high and that wicks low, okay? And it basically means that price is just going straight up, right? On that Wednesday, 1st of May, start of the month, Wednesday, Thursday, and Friday. That's what I'm thinking there, okay? And so Friday is currently the high of the month. We start the next day, Monday, Tuesday, going down. Wednesday is going down. Why are we going down? What's the market doing here? It's coming down to rebalance this area where the market only delivered price to the upside, buy price delivery, okay? And it wants to come down to offer sell side price delivery, okay? So the market Monday, Tuesday, Wednesday, and some of Thursday has come down for what objective? To balance an inefficient market, right? So it's met its objective on Thursday, as well as on Thursday, I'm going to take off this square now. It's taken some liquidity based on the low of Wednesday, okay? So what does that mean? Monday, Tuesday, Wednesday is the low of the week. Monday, Tuesday, Wednesday, right? Monday, Tuesday, Wednesday is the low of that week. What does Thursday do? There's still some inefficiency. Thursday goes below that, completely rebalances that inefficiency, takes out the low of the week and reverses. So now we have a break of the week reversal after the midweek. That's kind of what I trade. I am an expert in trading reversal patterns. Now, on a daily chart, this down move has met its objective. It's taken liquidity and rebalanced. And on a shorter time frame, I look for a reversal at the midpoint of the week. So we didn't get it on a Wednesday. We got it on the Thursday. Thursday takes out low of the week, rebalances that completely, and then changes direction. That's what I look for, okay? So now that we've done that, we've gone down, we've met the objective, we've taken liquidity and balanced inefficiency, market direction has now shifted, right? So directional bias now is to the upside. So on a Thursday, where are we going? Well, we have liquidity, right? Stops above the current week high. That was Monday, that was Tuesday. Okay, so the first target after market shifts, right? The objective is now done. We're now turning around. Okay, first target would be the high of the current week, which is Monday, the 6th of May, which we've done. Okay, we've done that. Now, that's why when I want to review and ascertain the directional bias, I want to look at where has the market come from? What has it just done? Okay, so if I'm looking at this today, what has the market done? It's come from a level of inefficiency. It's balanced inefficiency and taken out some liquidity, and now it's on its way up. And so now what we would look for if we were here on the Thursday, our first target would be the high of Tuesday. That high of Monday and Tuesday is very close. So I would simply target the high of the week on that Thursday. That would be my target on this day. When I'm getting down here at the turnaround point, I've got my own setups for reversals. If I showed you that on a lower time frame, I could pinpoint exactly where I would have got in London or New York for this move up. Okay, and my target would be high of the current week. This being Thursday, the current week high is Monday, and we didn't take it out on that day. So remember what I said. I trade from the midpoint onwards. So normally I would get a Monday, Tuesday, Wednesday move down. That's the initial false move down. Sometimes you get that reversal on the Wednesday. Sometimes you get that reversal on the Thursday. In this case, we got it on the Thursday. Okay, then I would trade that move up. Wednesday, Thursday, Friday is the second half of the week. In this case, it's just Thursday and Friday. Okay, and so Thursday trades up. We don't take out the target. Friday trades up, and we take out Tuesday's high, but Monday's high is still intact, and so it is expected that when Monday, the following week trades, which is the Monday that just passed, we would go through that high of the week and we would close out that trade. Okay, now the ultimate target is the high from the Friday before, okay, which is the high of the month. So right now we are still bullish, and we've taken out liquidity. Okay, we've taken out liquidity, and there's no change in market direction at this point in time. Okay, we have taken out liquidity, and it is possible that we now go down, maybe take out stops below the current below Monday or below last Friday. Okay, or we continue moving up, right? So here we may have a little bit of uncertainty, but then that's where you look at a few other things that I won't discuss in this video that indicate we might still be going higher to take out this high from the current month. And what I see there is that the high of Monday, so let me take this off now because we've gone through there. I'll also take out these bottom lines so the chart's not too busy because they're irrelevant now, okay? And I'll leave this one so that you know that we've taken liquidity and this is now fully balanced. Okay, what I might do, just put this here so you can see that we have a balanced market and we've taken out liquidity. This high, I'll put a line there, which is Monday's high, yesterday's high, okay? And this high, which is Friday the week before's high, the high of the month, is too close together for the market to just leave, right, and go down, okay? Sure, that's possible. It could go down and take out some of these lows, highly unlikely, okay? And so my expectation would be that because we are still bullish, okay, if I look where we've come from, indicates to me we are rising, okay, because we've already done the work down the bottom there, and there is a lot of liquidity sitting up here, which is basically people's stops. Retail traders have shorted from these levels, okay, so they've sold short and they have a lot of buy stops up here to get out of their short positions, okay, and this right now seems to me like that's where the market is reaching for, liquidity up high. Now also, there's all this efficiency on the left-hand side. This huge down candle is all downside price delivery. You can see it's all downside price delivery. Okay, all this downside price delivery that the market has now been coming up to try and rebalance this entire area. So that is another level that we need to consider, that the market may be going up here to balance this market, and in doing so, may want to take out this liquidity. And seeing that we've already done the work below that level, we've already taken liquidity and rebalanced all this, it only makes sense that we still are in a bullish environment because there still resides liquidity and inefficiency, okay, that the market would want to reach for, because the market typically only moves for one of two reasons, or both, take liquidity, right, or rebalance, okay? So that's typically how I look at the market on a high time frame to establish my thoughts and identify a directional bias. That's all I look at. I want to see what has the market done recently, where have we come from, and where are we potentially going, okay? Now, if my target is somewhere at these highs, okay, what does that come in at? That comes at 1.084778. Now, I'll just round it up to 1.0850, okay? Then once I take out these highs, I most likely will not take out any long positions, because once we take this high out, the move from there to this is only 34 pips, okay? There's no guarantee we will get up to that exact point, okay? And so it's too risky to, once you get through these highs, to consider continuing to look for longs to get to that ultimate high. I would call that the ultimate high. So I hope that makes some sense. You've got to go back and just kind of look at what I've explained here. That's my approach, okay? It doesn't mean it's the only approach, and it doesn't mean that I'm going to be right. But at some point, I could be taking these longs, basing my, trading in line with the high time frame direction, and at some point they trade maybe wrong. We get below. At that point, I may consider, have we now changed direction? What are we now going for? Okay, so there's going to be, on the way down, stops here, right? Anyone that's long from that Thursday is going to have sell stops below there. There's going to be stops in this, right? So there's always opportunity for the market to move in both directions. But you need to work out what has the market done most recently to determine where is the market now going to do, right? If it's already taken liquidity, okay, if it's already balanced inefficiency, then it's going to move in the opposite direction after doing that to look for liquidity on the opposite end, okay, or inefficiencies on the opposite end, okay? Hope that makes sense. I'll now talk with you in a future video.